Africa Business News, proudly sponsored by EY.
Africa, it is huge, it is diverse, and its business landscape fascinating and dynamic. And that's our business here on your favorite weekly African business stop. In Nairobi, we have Bonnie Tunya, who brings us the latest from East Africa. Christy Cole Popola in Lagos gives us news from West Africa. And joining us today in studio here in Johannesburg is Ritesh Anand, founder and CEO of Zimbabwe's Invictus Securities. My name is Victor Homoeswana, and this is the Africa Business News. Mambo Boni, Safaricom continues to lead innovation in mobile telephony across the entire continent, but the company seems to somehow generate a lot of bad PR lately. On the one hand, the company launched this mobile innovation, the innovative product called SurePay, to track funds, but CEO Bobby Collymore had to do some damage control at the weekend on something much closer to the Kenyan pockets. What was the problem in the first place?
Yes, Safaricom has been known for all things positive. This time around, they seem to have missed their step, but their CEO came back to try and rectify that. And Safaricom had introduced a new data pricing structure with a 30-day validity that's angered most of its subscribers. Now, some of whom began a vicious online petition to get the terms and conditions of that particular thing revised. Now, Victor, this was the first for corporate Kenya where consumers threatened to vote with their feet in regard to a service they're getting.
I might just add that in neighboring countries, Safaricom has a competitor called MTN, which recently announced they would be slashing their call rates to South Sudan. But about 4 weeks ago on another story, we talked about listed company Mumias Sugar, Bonnie. Then it was being implicated in a sugar import scandal. Why does this sugar company, the biggest in the country, need a bailout this time from the government? And what is the essence of the government's rescue plan?
Well, Victor, it is evident that Kenya's largest sugar manufacturer can no longer finance its business and has in turn has to turn to their shareholders and taxpayers at least for the next few years. Now, just last week, Victor, the company's half-year results showed that the firm's pre-tax loss had widened by 2 billion shillings, and their government bailout, Victor, is long coming and seems like the only glimmer of hope for the sugar maker, with a new report from the KPMG suggesting that the company will only be back to profitability in, say, the year 2019. Now, should the lenders agree to the proposals of a 5 billion shilling bailout, of which 1 billion will be from the Treasury and 4 billion from a rights issue, Victor, the KPMG also notes that Mumias would in turn need a fresh 5-year, 3 billion loan with a 24-month break or interest on principal for the repayment. And Victor, the new loan would push Mumias' total debt to just about 13.2 billion shillings. It is already having a debt of just about 6 billion, but it will also give it much needed working capital and generate revenue, with KPMG saying the miller should have serviced a huge chunk of the loan by 2019. Now, Victor, all this sounds good, and should this happen, there is also some bit of a conditionality with the government saying it has to happen within an environment of improved corporate governance with the sugar miller. Now, the government has maintained that the bailout should and can only happen once the firm's board leaves the stage, as well as the reduction in the staff numbers, all of which have brought a lot of contestation.
Thank you, Bonnie Tunya, coming to us from Nairobi, Kenya. Joining us next is Invictus Securities' Ritesh Anand, who gives us some insights into Zimbabwe. We are joined by Ritesh Anand, founder and CEO of Invictus Securities. Ritesh also sits on the board of Zimbabwe Asset Management Company, a subsidiary of the country's reserve bank that was set up to mop up toxic assets, I must say. The story of the Zimbabwe Asset Management Company, it reminds me of what they had in Nigeria when they were starting the consolidation of the banking sector, which worked wonders for that sector. Is it the same story in Zimbabwe? I saw a failed bank last week. I can't remember the name.
Yeah, the bank was AfriAsia Bank, but right. The Zamco was really established in very similar circumstances to what you had in Nigeria. Our non-performing loans have increased from less than 3% in 2010 to over 20% in November 2014. And that really prompted the Reserve Bank to institute measures in place to protect depositors.
So you can say the measure is reassuring that the economy will be on stable ground, at least the banking sector, because we need that to work. But Zimbabwe is an economy, in my opinion, Ritesh, that punches below its weight. The potential is always underestimated. Tell me about what you see looking at the economy and what it is likely to do in 2015.
Yeah, I think Zimbabwe does have tremendous potential, and as you say, has been punching well below its weight for over 15 years. Post-dollarization in 2009, the economy grew by 12%. Since then, economic growth has stalled, and this year we expect the economy to either be flat or grow by 3%, which is very much in line with the World Bank estimates. The headwinds that you have are much lower commodity prices. We also had a very poor agricultural season due to erratic rainfall. So, the outlook for this year isn't very positive, but I think long term, Zimbabwe does have significant potential. It has tremendous natural resources, which haven't really been leveraged by the government.
But now you're telling me that the Minister of Finance saying, hey, forget the diamonds, Zimbabwe is broke, let's focus on other things. Tell me what we can expect in the mining sector, particularly in Zimbabwe, because of what happened with the Marange diamonds. I mean, that was a very bad track record for the country with its mineral resources. Can we expect something better to come out of the other minerals?
Certainly. I mean, if you look at the platinum sector as an example, government to a large extent have left that sector alone. You look at gold production, that sector has really performed well. So, and coal, I think you'll see Zimbabwe becoming quite a significant producer of coal over the next few years. So, I think government's thinking very carefully about its policy, its mining policy, its mineral policy. And that's because, minerals are depletable resources.
Well, you talk about government policy. Talk to me about indigenization. We had Xavier Kasukuwere, former Minister of Indigenization, Youth and Empowerment, very tough line kind of minister. It looks like there's a softening of the government stance on indigenization. Am I reading this correctly?
That's correct. I would say that to a large extent, government have in the last few months certainly softened their stance on indigenization, especially for non-mineral sectors. For non-mining sectors, I think government recognize that Zimbabwe competes for capital with Nigeria, with Kenya, with Zambia, and therefore we need to make our country attractive.
But what does the softening mean? The indigenization essentially means 51% of the company must be owned by Zimbabweans, native Zimbabweans. Does it mean the government is willing to negotiate that upper limit, or does it mean they're willing to let you get away without indigenization at all?
I think it's a negotiation. It's a negotiation process. I think investors will engage with government, understand what they're looking to achieve. And then, I suspect that those equity numbers will vary from, as low as 10, up to 51%.
Looking into the future, my take is anybody who's not in Zimbabwe is going to kick themselves because the economy is eventually going to turn around once the political situation is sorted. Is that your reading of the future in closing?
That's absolutely correct. Zimbabwe is back in business. Zimbabwe is very serious about reforms. The IMF visit very recently reconfirmed government's commitment to reform. Zimbabwe, I believe, will be one of the fastest growing economies in Africa. I've said this and I remain committed to this statement. Zimbabwe has tremendous potential.
Far too important
to ignore.
Well positioned in the SADC region. It should be the hub of the SADC region. But thank you very much, Ritesh Anand,
thank you very much.
CEO and founder of Invictus Securities. Very exciting study they did on the future of Zimbabwe, the state of the economy. Look it up if you can. Next up, Christy Cole Popola in Lagos. Chess was about West Africa. Christy Cole in Lagos. I'm intrigued by the goings on at the Nigerian Stock Exchange. Only 10 stockbrokers responsible for what? More than 50% of the volume traded and more than 70% of the total transactions in February of this year. Meanwhile, the Central Bank of Nigeria declaring the nation's banks are sound. The retailers, on the other hand, are feeling the pinch of the devaluation of the local currency, the Naira. What's happening there?
I guess, true that the CBN governor has emphasized over and over again that the Naira is in a good place. Although the closure of the Aradas window has been considered a technical devaluation of the Naira, the official statement from the CBN is still that the Naira is in a happy place. Also, having passed the central bank's stress tests, the banks have also been declared to be in a good place. But definitely the realities on ground conflict the CBN's position on the banks sharply, as the Naira and retailers and consumers who should be The beneficiaries of such a sound system continue to feel the harsh realities of a more expensive dollar. In Lagos, for instance, we've seen sharp drop in stock levels and shelf inventory as inventory buildup was reported to have slowed by 25% as of February 2015 compared with the 2014 figures of the same period. Smaller retailers are feeling more of the effect of the Naira devaluation, and consumers definitely have to pay more, leading to repricing of shelf goods. I personally noticed an increase of about 25%. Now, increase in price of shelf goods are naturally followed by a consumer resistance, which is definitely not good for business.
Well, let's move a bit further west from Nigeria to Ghana. Barely 2 weeks after getting its IMF deal, reports are out Ghana will be issuing a Eurobond of $1 billion before the end of the year. With fears of austerity measures the IMF deal brings, though, with its 3-year plan, should Ghana be getting into more debts, Christy Cole?
Yes, Ghana's finance minister Seth Terkper says Ghana will issue a 10-year maturity Eurobond of $1 billion before the end of the year to repay part of its debt that will mature come 2017. Recall that in September 2014, Ghana lifted $1 billion through a Eurobond with a coupon much lower than analysts actually expected. The rate of that Eurobond stood at 8.125%, which of course is a largely rated performance for Ghana, whose currency, the CD, fell 31% last year. Although Ghana's GDP grew by about 7.5% over the past decade, its growth is expected to slow down in 2015 as the government is struggling to contain inflation, the budget deficit and the debt to GDP ratio. Now, although Ghana is still criticized largely by some of its local experts for the $930 million IMF deal it backed about 2 weeks ago to stabilize its economy, especially with concerns about the austerity measures that would follow the IMF deal, its finance minister has announced that the Eurobond is the next direction in a line of strategies to revamp the economy.
Well, that takes us to the trivia of the week, and we also get to hear about the favorite stocks of Christy Cole and Bonnie. They are normally bullish about the banking sector. Stay with Africa Business News. Which stock, Bonnie and Christy Cole, would you advise me to invest in if I had $10,000 to invest? Let's start with you, Christy Cole.
Today, I'm going for FCMB for 3 reasons. One, despite its rally, it is still considered as being oversold. Its recovery performance is not fully reflective in its share price, which is now 2 Naira 60 kobo from 2 Naira 10 kobo about 2 weeks ago. Now, the icing on the cake is because of its capital buffer, it is expected to pay some good dividend before the end of the year.
How about you, Bonnie, in Nairobi?
Well, my stock today will be Equity Bank. They've just released their numbers, 18% increase in pre-tax profit. They've had a fantastic rally. The price is at 52 shillings a share. They're up 2.97. Why would I spend my money elsewhere?
You love your banks, Christy Cole and Bonnie. Thank you very much for that stock pick. We're back next week with more Africa Business News. We thank Christy Cole Popola out of Lagos, Bonnie Tunya in Nairobi, and earlier on we had Ritesh Anand here in studio. Until next week, adios.